Hey traders, this is Blake Morrow with Trader Summit, and with me today for the very first time I have Lori McGwire from the Chart Guys. Good to see you, Lori. Glad you can make it with us.
Good to see you, Blake. Thanks for having me on.
You know, this will be our first time and together, and I want you to tell the traders that are listening to you for the first time here, what should they know about Lori, the chart reader, the analyst, the trader?
All right. My background is in healthcare, actually. And 7 years ago, I sold my business and I thought, man, I can retire. And I look at my retirement account. I'm like, oh, no, joke's on you. And then I'm like, I can manage my money. I can do this. And so I started teaching myself YouTube videos. Then, of course, I had great success at the beginning. That's the way it always works, right? And then it was all luck. And then you realize, oh, I've got to learn how to do this the right way. And then I found Chart Guys, and the rest is somewhat history. So I am now a partner of the Chart Guys, and I trade futures and options, primarily option spreads, and I do trade the indices via futures.
That's awesome. So I'd love to get your, well, since we're meeting on I want to call it a historic day, at least a historic day of the month. We saw a lot of volatility on the CPI data. It was kind of what the market was looking for, is in line with expectations. We saw a lot of volatility around it. Has it changed your views of the markets, where they stand right now? I mean, we've had this like pretty bullish run into the 4,000 level on the S&P. How do you feel about the stock market where it's at right now?
I think we've had a character shift over the last 7 to 10 days. When we have pullbacks, they're being bought a little more feverishly. The bulls are not stepping away from the bid. We would have these great rallies and give it all back in November, December, and things are shifting just a little bit, and bulls are making space for higher lows. So I think we do have a tone shift. I have to remind myself, as Lori, the consumer, 6.5 is still terrible CPI. I mean, that's still awful, but we can tell that the Fed's interventions are actually working and, decreasing inflation, obviously. So I actually am a little more bullish, and I can show you some patterns in a minute that are making me lean bullish.
Okay, so even after this big run, we've had a nice run off the lows over the last, let's call it a few months. You're still bullish at these levels as we approach this 4,000 level in the S&P. That's interesting. I want to ask you also this: how much do you factor in fundamental data, macro data into your analysis as a trader?
I like to say that I am decent at at fundamentals plus technicals. I'm decent at it. I know enough to be dangerous, but with the fundamentals, I would say it's like 10 to 15% of what really colors my view. I can just trade price action, and that's all I need, because the question is, does price precede news, or does news precede price? And we could probably have a debate about that for a while. So it's always fascinating that the news comes out right at that critical juncture of the chart of where we have resistance or support. It's fun. I love TA.
Yeah, no kidding. Well, speaking of technical analysis, why don't you show us some of the charts that have your attention right now as we look into the next couple of weeks, maybe even the next month, as we have to navigate through these markets.
All right. So what I'm eyeing, I would say number one is ES and this potential 2-week inverse head and shoulders. So some may argue that the right side, the neckline, could be a little higher for some symmetry. That would look better from a TA perspective. But I would say that this has the makings of a decent reversal pattern. And crypto has been giving us, has actually been our canary in the coal mine for a few days now. It was a canary in the coal mine in 2022, and then, of course, disconnected with the FTX debacle. But I would say that they have coupled up again. Bitcoin led us this past Tuesday, Wednesday, and today. It was strong overnight. So it gave me a bull bias into today, and I'll show you a bullish reversal pattern on Bitcoin as well. So this has my attention, this 2-week inverse head and shoulders. Potential is not confirmed. And then this morning, the location of where we got the CPI data gave plenty of room for a 4-hour higher low. So I knew going in, a pullback was probably viable, and that was my position. If the CPI came in at 6.5, 6.6 or less, a dip would be a gift, was actually my little tagline this morning, and it worked. So not that they always work, but they did work today. So I'm watching this on the NASDAQ, and let me go back to ES. I want to show you how we resolved the bear market in I have it ready. In 2008, after that bear market here, it's not going. 1 second. 2009. Just change that to 5. Okay, I don't know why it's not going, but I will just do it manually. If you're okay watching me
Yes,
go back
ahead.
here. Okay. It may work this time. I had it on the 4-hour. Yeah, that was my bad. So we resolved this 2008 bear market with an inverse head and shoulders. So that marked the bottom. Inverse head and shoulders are obviously a more reliable bullish reversal pattern. So that's how we resolved the bearish market in 2009. So it would make sense that we would have a similar pattern this year. I'm not saying that it will happen, but it would make sense. So one concern right now at the moment is the daily 50 MA on NASDAQ. We're clearing it pretty well right now. You don't want to see that fall back below today. I think that's where we had the sticking issues on NASDAQ this morning, but it looks like that they're clearing it just fine. And then RTY. I have been noting this as part of our swing report service that the 50 MA on the weekly for RTY has been resistance for 1, 2, 3, 4, 5 candles. And we're testing it again the 6th time. And as we know, the more we test something, the least it becomes, the lesser the resistance holds or the probability that it will hold. So this is a little bit promising here that we're testing it. I'd like to see it, of course, up and over. I'm going to stop now and make sure you don't have any questions. I'm going through these kind of fast.
No, this is great. Continue on.
All right. And then I talked to Dale about this a few weeks ago, and this pattern is still legitimate. And this is a fly in the ointment. Sorry, I'm from Louisiana, so I have my analogies. But this is a fly in the ointment for bulls in my bull case with this megaphone with 3 legitimate touches here. We only have 2 on the bottom. But I would look for resistance potentially in the Dow. So here it acted as resistance and I shorted that. I posted my trades in our chat room. It was a great short. If this happens again, I would have to look at NASDAQ. If NASDAQ's leading, I would back off of this short. But Dow has definitely led us on this run the last few months, or let's not call it a run. The bull market rally, the Dow has definitely been the leader. I do have this on my radar. And then the dollar chart, this monthly chart gives me hope for bulls on any bounce on the dollar. We're still looking for a monthly lower high. And as we know, the dollar is a headwind for equity. So I like that this has pulled back so much and now we've made room for that lower high. So we may have to endure a dollar bounce soon. I was watching this daily bear flag, these double inside bars that broke bear this morning, but we're approaching oversold, or we oversold. We're oversold now on the 4-hour on the dollar. So if the dollar gets that little oversold bounce going, then I would say the market may, experience some consolidation. And we know with retracements and consolidation, it's how you retrace. You want to retrace gracefully when you pull back. So that's what we're looking for on any pullback with the market. And then US 10-year. I would say that this actually isn't a great look for the market, that the US 10-year is in a potential monthly bull flag. It hasn't pulled back as much as the dollar. So, and we know US 10-year is a headwind mainly for NASDAQ because they have those technology companies that have so much debt on their balance sheet. So higher interest rates aren't good for tech. So this is, again, another fly in the ointment for the bull case. And then we have bonds. Bonds have a weekly potential Adam and Eve reversal pattern here. And we know bonds and equities can work together. They don't always, it's not a one-to-one correlation, but I think that this is an encouraging bullish pattern. And then we have Bitcoin with a similar pattern. I mean, I can't believe I'm saying this after the FTX mess, that Bitcoin is actually looking good. So Bitcoin led us last night. Let's look at the 4-hour. It was making bull moves while equities was slightly going sideways. So, crypto is a risk on scenario, and it lets us know that people are putting money back to work. And we assume that there is a lot of money on the sidelines for the equities and for crypto. So it looks like people are deploying money back to the markets. And then finally, the market that I have, or the sector I have my eye on, are semis. So I think this may look better on the 2-week. Yeah, it has the same 2-week inverse head and shoulders that ES does. And I always say that semis are the fuel to the market engine. So if semis are doing well, the market should be doing well. So this is another encouraging sign.
Well, that does look like you've got some pretty good bullish setups there. I wanted to ask you, because you mentioned it in your as you were going through your analysis, how strongly do you consider correlations in the markets?
I consider them pretty strongly. I actually have this spreadsheet that I share in pregame, the pregame show that I do every morning, and it's free. These are the correlations that I track. I call it I take my meds every morning, my market environment dossier. It's basically what information is relevant. And if anything changes overnight, I just check it. And these weightings are arbitrary based on my trading experience. They're not the Bible. And of course, you and I could go through and check these, and we could complete it differently. You think the dollar's bullish, I think it's bearish. Are we looking at the 4-hour or the daily? So again, it does have some subjectivity, but it just helps me bring more objectivity to all of these different correlations and what matters and what doesn't. So this morning, this is my my med list from this morning. I was looking bullish. We had more signs pointing to the bulls and bears. So we use correlations heavily in TCG. We look at things like Apple over QQQ. We look at ratio charts. And like right now, we know that Apple is weaker at this moment. Apple's holding the market back, and we can see that on the 5-minute chart. So if I'm looking for something to, I don't know if you can see this. Let me market ratios. If I'm looking for something to go long, I can just scan this list real quick, and I can see, oh, Facebook, well, it's Meta now, but it still works as this, but Meta is stronger than the other tech names. That's a good long. And if I'm looking for a short, Tesla's the short, because Tesla related to SPY, compared to SPY, that Tesla is weaker than SPY. So on a bounce, on a market bounce, and then if it starts to pull back, Tesla would be the first candidate I would look for to short.
All right, well, that makes a lot of sense to me, Lori. So, if I'm a trader and I'm just like seeing you for the very first time here on Traders Summit, what's the best way for me to follow your work?
Well, first of all, you could follow me on Twitter at ChartGalLori. You can check me out there. I won't spam you. And then we have our website, chartguys.com. Well, I was a gal that entered the party later, but I'm okay being one of the guys. So I'm part of chartguys.com, and you can click on membership, community, and we put a huge emphasis on community. This is us in Mexico. We had like 60 traders meet up in Mexico. We had a meet up in Asheville twice now. So the community aspect is my favorite part of what we do.
Well, Lori, I really appreciate you being here on the Traders Summit, and I'll look forward to catching up with you here in the next few months and seeing if the markets did reconcile to the upside or not.
That sounds great. I look forward to it.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.